Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it a dangerous time because it's that time of year, September, October into November, when the market can be pretty weak. We all know about the historic crashes that have occurred in this time of year. I'm not saying the market is about to crash, but like I said, it is a dangerous time. The S&P 500 has been down 17 of the past 27 years. So we'll see what happens. We had a pretty weak performance this last week with the Dow down 761 points, the S&P down 77 points, and the Nasdaq Composite, let me pull it over here, down 248 points. So very negative price action. But when you look at this, I mean, they're still in a pretty solid uptrend, except for the Dow. The Dow's looking pretty weak in here. It actually closed below the trading of the last 6 weeks, the entire trading. This was the lowest close since the week of June 19th, I believe. If you go over and just look where the closes are in here, very negative price action. So today I want to focus on the Nasdaq. Let's go back over here to the home page. Here's that weekly chart I just showed you, and here's the daily chart. Friday was very negative. You can see how it just came right on down and closed almost on the low for the day and for the week. And the big thing here is look how bearish engulfing this candle is. What do I mean by that? If you look at the body of the previous week, we literally engulfed to the downside the entire body of the previous week. That's very negative. Now, you need to see follow through. Now, here was a bearish engulfing type candle, but we gapped down, but then turned higher. Are we going to get something like this, like back in February? We'll see. We need to see what kind of follow through we get here. And let me take a look at the Elliott Wave picture. Let's go right here. I think we're at the top of the third wave. That's my preferred count that I've gotten. I'm talking about the third minor wave within the fifth intermediate wave. Okay, so let me zoom in a little bit. So here's the wave count I've got coming off that March 2020 low. I think it's 1, 2, 3, 4, and in the fifth intermediate wave. Now, your initial glance at this, you say, well, wave 3 looks like it might be the shortest wave. Well, again, the rule is wave 3 can never be the shortest wave, right? Okay. So wave 1 was somewhat extended. Wave 3 is shorter than wave 1. So to make this count work, we cannot have wave 5 be longer than wave 3. So right up here at 16,052.68 is where wave 5 would equal wave 3. So I already know where our threshold is on this scenario. And right now we're well below that. And I'm looking for this to pull back. Now, we had a pretty sharp pullback for wave 2, minor wave 2, pulled back over 61.8% of wave 1 when you look at percent of wave 1. But when we come over here to wave 3, what I'm looking for, the bogey I would have is a 38% retracement. You know, that's typical target for a wave 4. And it's interesting that lines up pretty close to the end of the wave 4 of 1 lower degree right over here on August 19th. So that's what I'm looking at. I think it may take a couple of weeks. We'll see what kind of price action we get. All right, let's look at a couple of our indicators. I want to take a look at what happened with the VIX on Friday. Pretty strong move, pretty strong continuation of the price action. And again, you know, you think about the move that we had this week in all the indices, and it was just a 4-day week. So quite a bit of movement packed into 4 days. And that's the other thing. You know, last week I talked about the compression that we were seeing in the Dow. Let me go back to that. Well, before I move, I know my mind's jumping all over the place here. Sorry about that. Let me finish the VIX. All right, here's this longer term trend line. I think if we come up here and close above that trend line, it's going to be an indication that we have a pretty strong explosion underway, and it's going to coincide with a whole lot of selling. So we'll see what happens. Let me go back up here and take a look at the Dow. Now, I talked about last week, I said we hadn't seen anything this compressed since December of 2019. That was the title of last week's video. Well, compression, expansion. That's what we're getting. Now, it's not the most expanded week. It's not the biggest week from high to low, but compared to what we've been seeing, pretty big week. So we'll see what kind of follow through we get in here. Let's take a look at the high yield bond fund, HYG. Now, let's start off with the daily view. Okay, here's a range, a trading range I've identified since the high over here in July. Just looks like we've been bouncing around between it, inside of it. And Friday, it actually looked the way it opened like, hey, it's going to make a run and break out to the upside, and not so fast. Right after it opened, it just sold off for the rest of the day and closed back down below that 10-day moving average. So the interesting thing is, I was talking with my members about this trend lines in here that I've drawn. Trend lines are really, really interesting, and you're always looking for the implications of the break of a trend line. Well, the more vertical a trend line is, the less impact the break of the trend line is going to have. Now, here's a 45-degree angle, pretty much, and we've broken down out of that. And then what it looks like to me is we literally pulled right back up to that trend line with that high that occurred at the end of August. Now I'm watching to see, do we come back down to the bottom of this range and approach this trend line, which is a lot flatter, and we come down and break through this right in this area here, say mid-September to late September, we could see some pretty significant selling going on, and that could coincide with the market. When you look at the weekly chart in here, the trading range for the whole year really hasn't been very great. It's been pretty tight with the high yield bond fund, and it is held below the January, February highs of 2020. So we have not confirmed any kind of extended move that has occurred with the indices. All right, let's take a look at the dollar index. I haven't looked at the dollar index since I think it was August 1st, my video. And here is the bullish view. Okay, when I talked about this, let me correct that. There we go. Now it's lined up correctly. When I talked about it back at the beginning of August, where were we? We're right in here. And I said, if we come up, take out this high, and especially this high over here, 93.44, then, I'm going to be turning pretty strongly bullish. And that's exactly what we did. And yeah, I did turn into this bullish count as it looked like it wanted to continue to push higher. Then what did we get after that August 20th high? We got a pretty sharp pullback, this wave 2. Now it's still valid as a wave 2. It's just pretty deep retracement. But now I got to sit back and say, if we come down and take out this low right here, I've really got to lean into the possibility that maybe something more like this is going on, that we had a bigger wave 4, intermediate wave 4, and that we have more selling to come. But again, we've got to let the market tell us what it's doing. And so right now I've got these markers that says we take out this high, it reaffirms the bullish scenario. We take out this low, it reaffirms the alternate scenario over here that we have more selling to occur on the dollar. So keep your eye on this. This is what we're watching. What is that low? 91.78. The high, 93.73. So I would say those are the parameters that we're looking at with the dollar index. Okay, Apple's got a big, announcement session coming up this Friday, or no, not Friday, Tuesday. Their fall announcement of new products. They're going to talk about the new iPhone. I want to take a look at Apple. All right, so pretty negative move on Friday with the price action down $5.10. Let's take a look at the weekly view over here. This looks like a big reversal type candle, big bearish engulfing type of move that occurred. So we'll see if we continue to get follow through in here. This was all tied to the announcement, but some judge ruling related to the App Store and what Apple's able to do and what they can't do, et cetera, et cetera. I'm not going to go into details. You all know what's hit on this. But I've been, looking for this thing to top out. I've been looking for this thing to turn down. It has continued to kind of push higher in here. But now this could be the first major crack in the ice, and watching to see if we continue to get some more follow through. What I'm looking for on Apple is a bigger corrective move. Okay, so what I post and what I talk to my members about, let me correct that, didn't mean to grab that, is this view that I am looking for this to have a much bigger corrective action in here and breakdown, but one step at one day, 1 week at a time. Right now, we need to see this continue to sell off in here if that's really going to be the case. So that's what I'm watching for. We'll see what kind of announcements they have, whether they continue to reinforce enthusiasm after Tuesday, or whether or not everybody's disappointed. We'll see. All right, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like more of this kind of information on a regular basis, head over to joehenches.net. Check out the website and the membership. Everyone have a great week. We'll talk to you on the next video.